Hey guys, thanks for joining the video here this morning. It is January 22nd, 2020. I want to do a real quick update on Bitcoin, and it probably will be very quick because not a whole lot has changed since the last video that I did. So I guess what I want to look at is I want to take a look at the current price action, which we had a little smidge of volatility yesterday, but nothing really, too crazy. So I want to talk a little bit about that. But of course, before I get started, this isn't financial advice. I'm not your financial advisor. I'm just giving my opinion on the market, and you're responsible for managing your own risk, doing your own research. And so let's go ahead and get right into it. So I did change my chart just very slightly. I want to talk about the count that I originally had, which was basically having the 3 coming down here and then the 4 pulling back around right here. And I've just recently kind of changed my bias here just a little bit to say that this was potentially the top of the third. The interesting thing is CME futures didn't have this spike up above 9,000. That just didn't happen because this happened over a weekend and in a holiday weekend at that, when there was no trading on CME at the time. So basically this move up and then this move down did not happen at all on CME futures, and it actually is what created that little bit of a gap on CME. But nonetheless, we're still sitting back here on the 3-hour. We're just hovering right around the 55 exponential, and the 21 exponential is getting dangerously close to that price. Now, if I did have to look at the past when we had a little bit of an uptrend and then we had sloping down, getting ourselves back closer to the 55 exponential, it'd be very similar to how the price action looked right back here. We had a spike up, we had a spike down, we had a little bit of an uptrend, and then we came all the way back down to finish this too. All right, so we've come down, and then we're still ranging here. I would argue to say that we had a little bit of a range back here as well. We had a decent range in this area, just like we have not the same range, obviously, but we do have a little bit of a range back here as well. And the range is tighter up here than it was down there. And I do have a bias that we will likely come back down to 8,300. And when that happens, what that's essentially going to be doing, it's going to be testing this area right here. And then we're going to be looking to see basically a push down and then an expansion to the upside. And likely that's going to happen in 5 waves. And then I don't know how far we're going to go yet. We're just going to have to wait and see. But what I'm expecting to see is a little bit of bearish divergence. So what I'm kind of expecting to see is an uptick on the price, and then on our oscillators down below. Let me just finish that off. And on our oscillators down below, I'm going to be looking for some bearish signs on some higher time frames. So the hourly is going to be pretty fluid, but I would say on a 3-hour, a 4-hour, some of our other oscillators that we take a look at, stochastics, the MACD, especially the histogram on the MACD, I do give more weight to that. I would expect to see some bearish divergence, and then we start to see this push back down, which is going to take some time. And to be quite honest, it probably will take longer than this. It probably will take longer than the month of February to get us down there. I mean, January, has been a pretty darn strong month. And so we're going to have to wait and see how January ends. But if we do get all the way up here at the end of January, that would mean that almost the entire month of January, actually, basically the entire month of January is almost a 100% green month. It's going to look like a pretty decent green bar on the monthly time frame, which would look pretty good. But I do think that we're probably going to pull back this entire move. So let's just say for a moment that we do come all the way up to 9,500. Let's say 9,500 is the top. And by the way, just in case you haven't already guessed, I am expecting another push up. And let's say we do go to 9,500. Let's just take a look at this and see what we have to contend with on a pullback. Let's just say in a perfect world we get 9,500. I'm going to get as close as I can. 94.99.5 is pretty close. I'm going to be expecting to see a move back down here to the 618, and this really, if we do cap out at 9,500, and we do start a pivot from there. I would say that down here to 79.50 to 75.85 is probably where we're going to end up. And it is going to take a decent amount of time. It depends on how fast this happens. If it comes back down here pretty quick and hard, even in the first 2 weeks of February, I would say that the 618 to 75.85 makes sense. I don't really want to see us come all the way down here to 7,064, even though that's sort of where I had projected this to happen. I'd projected 7,000 to hit again, in March. And again, I talked about this quite a bit, and it could take a little bit longer than this to happen. But if we do happen to come all the way down here, what this sets us up for is the April pump, right? So we talked a lot about the April pump and what effect that is going to have on the market, because it has happened historically. It happened in 2019. It happened in 2018. I'd have to take a look at some other charts. To see if this happened also in 2017. Let's see, we'll take a look at dailies. And of course, let's just go back here and just take a look at this, kind of ignoring all the other stuff that I've got here. So April pump here. And then back here, let's take a look at April. We had an April pump here. And this all happens within the first 2 weeks of April. So this was on April 12th. Last one was on April 2nd. Let's go back here and take a look at April in 2017 to see if we have any signs of a pump in April in 2017. This week right here was a 6% pump, and then also a couple days later we had another 5%. So April, pretty green month. And let's go back to 2016. Okay, so here is April of 2016, and take a look at this. So we have here April 15th, we started at 425, and then April 26th, the end of April, we ended at 467, and some significant dips with all of that, but that was still a 10% increase. So, and of course, we know what happened. We know what happened here in 2016. In June of 2016, we had this big move up. Is this coincidence that we had a pump in 2016 that that got us all the way up here, and then we came back down? Very similar to what happened or what is happening right now with Bitcoin. We topped out at 13,800 in June of 2016, or sorry, 2019, just like we topped out here, and then we had a nice pullback to the 200. This is the red 200 simple, the purple 200 exponential daily, and we stayed above that for a significant amount of time, and now we're just we're all over the place at this point. We're basically butting our head up against this 200 simple moving average, but we are trading above the 200 exponential. But as far as a daily time frame goes, we're still above most of our major moving averages, which is pretty bullish. We have 21 and the 55 crossed. We're getting ready for the 55 and the 100 to cross. So we're going to kind of have to wait and see what happens. But again, going back to my primary count here that I have on my BitMEX chart, this is still looking pretty solid for a push down to 8,300. And then we're going to see that move up to potentially 9,500. That's kind of where I'm expecting to see this go. You're going to have a lot of people that are going to be trying to FOMO in, trying to get the 10,000 target, and I would say that chances are pretty good this is going to top out somewhere in this range. Of course, I have my red box up here based on the top that we had on our major wick back here in October of 2019. And so I'm expecting this to continue to be some resistance that we're going to have to chew through before we can, finally kind of make our way through it. I don't think we're going to make our way all the way up here to 10,200, but if we do break above 9,500, then I do believe that we're probably going to continue to make our way up to this 10,000 to 10,200 range. So that'll kind of get us all the way up here to the top of this expansion. So again, we have our channel here that we drew out a while back, which has the yellow upper, the yellow lower, and the green median. And then we have the red expansion. So basically you take the size here of the green to the yellow, and then we expand that 100% to get our red range. So if we're going to be expanding this channel, then we're going to expect it to stay inside of this red range for a while. And if it bumps its head up against this 10,200 range here still before January is over, then so be it. I'm expecting there to be a pullback here at this expansionary upper range. So definitely keep an eye out for that. But going down to an hour just to appease those that are focused, that are ADD focused on the current time frame. Let me just go ahead and outline this for you guys. We'll get a parallel channel here. We have our first upper, which is right here, and then we've got let's move ourselves out, and then we've got ourselves a pull down to our lower, and we're going to go ahead and outline this as the lower. And basically where I'm pulling these ranges from is I've got this upper right here, and let me remove some of this other moving average nonsense for the time being, get rid of my Bollinger Bands just to keep the chart real clean as we look at this. And then as far as the lower goes, I'm going to be using this. So basically what I'm trying to do here is I'm trying to get it to the point where we are ignoring the volatility wick down here, this first wick that we had down, and basically had our push down right here. And then when we had a push up right here, that's going to be basically where I'm going to be defining our trading range. And our median, which is right here, at 86, basically 86.50. We just had a little bit of a rejection off of there, tapping liquidity, in all areas here. So we've got liquidity pools that are being tapped on the uppers of all of this. So we've got the upper liquidity pool. Let me go ahead and just change the color of this. I like to outline my liquidity pools in blue. And same thing with to the downside. We have our liquidity pool that we are tapping here to the downside. Eventually one of these is going to break. And if I had to say, the weaker is going to be to the downside for the very short term. I would say that we have tapped the lower liquidity pool 1, 2, sort of, 3, 4, 5, and this time it closed in the liquidity pool and then moved its way up. Nice reaction off of it. Small tap to liquidity to the upside, another small tap to liquidity to the upside, and then we've moved our way down. So again, to the downside, we have weaker liquidity to the downside, and I would say the same thing is also true to the upside. The first time we pushed up here to 87.73, and this next time we pushed to the upside, we almost hit 8,800. And let's see if there is any significance to 8,800 to the upside. We're going to take our fib from the top to the bottom, and we hit almost the 50. Almost to the 50 at 88.11. So, if we get another push up here to 88.11 and we get rejected here, then I would say that it is a very, very high chance we come back down to 82.50. So, I'm looking potentially 8,300, 82.50. I would say somewhere in this range is the range where you would need to pay attention. I see the comment there by Awal Noor. I'm definitely getting impatient as well, but nonetheless, I'm not to the point where I'm just giving up all hope. I'm going to be paying attention, creating some liquidity down here between 82.50 and 83.20. Likely that's where this is going to have a nice spike down. It's going to break this liquidity pool. We're going to have a spike down into the next liquidity area where there's going to be a decent amount of demand down here. And if this is an ABC correction, then basically what we're going to be looking at is from down here, from the top. So we've got this A, and then we have this B. I don't know if it's going to be here, if we're going to push up to 88.11 again, but nonetheless, we're going to come down here and try and realize our algo target, which is going to be down here at the 82.50 area. All right. Yeah, Steve, I'll throw in a comment here and get you an invite to the Discord right now. Actually, let me go ahead and take care of that. And of course, if there is anybody that wants to join the Discord, it doesn't cost anything to join, and be more than happy to have you guys here. So let me go ahead and throw this here in the comments for anybody that does want to join if you're not already in. But nonetheless, this is really just kind of a no trade zone. I'm not really seeing any conviction here. I wouldn't short here. I wouldn't long here. What I would be waiting for is to come down here to this area 82.50 before I open up any long positions. Because again, as I've outlined here, again, trying to clean this up one more time, this area right here where we have our channel, you know, I'm not really seeing this as an area that's worth placing any trades. Yeah, sure, you can try and do some high leverage trading down here and up here in these liquidity zones, but it's very, very tricky. I wouldn't recommend it. I would be more or less looking to open up spot positions, long positions down here in this area, and that's really kind of where I'm looking, at least for the short term. But I already covered my long term. This is my short term, looking for that move down here, and then potentially the move up to maybe 9,500. But I do think we will create a higher high, create a little bit of hype, maybe get some volume in here as well. Volume really hasn't looked the greatest. The highest volume that we've seen here in recent time is this big dumping candle. So lots of negative volume there. Nonetheless, I am still looking for maybe one more move down, maybe after a move up. But nonetheless, we're going to be looking for move down here to 82.50 to 83.10 or so. 83.25, and then see that move finally to the upside. For spot positions, probably okay buying here in this range. But for leverage positions, I'd be waiting for a better entry, because right now the trade setup is very bad, and the rate of return is not the greatest right now. And definitely you'd be looking for potential drawdown. And if I had to guess, this is the last thing I'm going to say. If I had to guess, there's a lot of people that are buying this dip right here. And if funding on BitMEX has anything to say about it, I would say that BitMEX here in this range previously has been very bullish. Now funding has leveled itself out, but I would venture to say there's a lot of people buying this dip right here. And that is reason for me to believe that we will see one more move down to basically either liquidate high leverage long positions or squeeze out some of these long positions that are using, a significant leverage, maybe 10x leverage or something like that. Get them out of their positions, and then this is where I would be interested in opening up long positions. I am not interested in opening up long positions right here. Really, honestly, I'm not interested in opening up short positions either, just because it is very possible that we do move to the upside. But I guess right now, I would say that we probably do have one more move to the downside. So yeah, that's all I've got for right now. I hope this video helped you. I'm a little more on my game today than I was yesterday. My Lumens video yesterday was just not the greatest, so I apologize for that. But just as you all know, all of my videos I do in real time. I don't prepare any of my stuff ahead of time. All of the analysis that I do is in real time. So again, if this video did help you in any way, shape, or form, please feel free to like, subscribe, share, all that good stuff. I do appreciate you joining in. And wherever you are in the world, I hope you're having a good day, a good night, and a good evening.